Welcome to Market Mania Minute, recorded on the 9th of January. We have some interesting market news for you, as well as absorption rates. Dad, Bill, do you have the absorption rates up? I forgot to ask you to share your screen earlier.
I will have shortly.
Okay.
Very interesting.
Well, while you do that, maybe I should jump into market facts.
Got him. You ready?
You gotta share your screen. Share your screen, please, and then make just the graph.
That's funny. It says I am sharing.
Okay, then just talk about the numbers because I can't see it.
Okay. Well, whether you can see them or not. Bottom line is things have slowed down a lot just in the last week. We saw record absorption rates peak last week, especially in Montclair and North New Jersey, out in the suburbs where it was crazy, 200, 300, 400% absorption rates, which was killer. But we had talked about the fact that the market was slowing, and we thought that was year end and we would see them drop, and indeed we did. So they're down significantly this week. And frankly, everybody's numbers are down this week. First week of January, could be the fact that it's cold weather, could be anything, but everybody's absorption rates are off. So that means that just for 7 days. Delayed. Yeah. So, and that's on a 30-day tracking. Anyway, so I mean, that's really the bottom line. Everything, it was interesting. Usually there's a little bit of a horse race, and this time everything was just down. So
dropped.
And
that's to be expected because it is on a 30-day lead time, and the holidays, that's the middle of the holiday season. So for the next couple of weeks, we'll probably see it a little lower because we would expect that. And then it'll probably pick up again because personally, I'm seeing offer contracts go in and lots of things happening over here. So
things are really, I agree. Things are heating up. They're getting busier. Offers are going in. I've been watching listings. I've seen more listings in high rises lately than I have in lower rise buildings. So some of the taller buildings that are around where we're at are suddenly seeing a lot more listing. Galaxy Towers in particular. It's weird. Like an unusual number of newer listings there. So that's
lots of people waited for January, I guess.
I don't know what the story is there yet. But inventory is also very low. So we'll see what happens. I have a feeling that almost any forecast that I've seen for this year has been super strong. And that's in soft markets like Hoboken, downtown Jersey City, Weehawken, West New York, Northburg, and Union City. The forecasts are strong, like 6 to 11% increase this year.
So that's a good segue into the market news, because doing research this week on what is happening in the market, what's in the market news, what's in real estate news right now. First, active home listings hit a record low nationwide. So supply has dropped, but buyers have shown no signs of stopping their purchases. So that's an interesting thing to see. We personally in this market are starting to see supply increase, but in general in the nation, record low of supply, record high of demand, and that explains why, in general, the nation has seen a crazy increase in prices this past year and still. So there's still,
as markets have flattened out, or people are leaving tall vertical markets and going to more horizontal markets, and it's
and homes continued selling rapidly during the holiday season too. Closings were on average about 2 weeks faster than 1 year ago, and fewer sellers entered the market during the holidays than 1 year ago because most of them who were willing to sell have already sold. So it's really interesting. Also, median listing prices climbed 13.4% over the last year.
It's amazing.
So it's it's wild. It's wild.
It's going to be interesting to see how that shakes out when people that are that overheated market as properties were going on the market and as they were being gobbled up above ask, that was driving up the asks, the initial asks. And even then, as that's driving up, they're still getting 20, 30, 40, 50% over ask.
Yeah.
And then, so now you're 30% over ask on a property that's asking 30% more than they would have had they listed last year at the same time. And
yes. For suburbs and single family homes. For single family homes with private entrances with a yard, especially. Which is, it's so cool that we are where we are because we straddle both. We do work in the suburbs and we work in New York City and urban New Jersey. Our team is covering all that ground. So we do research on all of that. And so you've got one side of the coin, which is that. And the other side is New York City and urban New Jersey. New York City specifically had a big decrease last year, as we know, in real estate prices and real estate volume and real estate everything. Rentals took a skydive. They went really low. So that's
still are, but you spend more time in the suburbs than I do, and I spend more time in the city than you do. So I've kind of got the east. I've been in the lesser favored area the last 6 to 9 months, but I think it's going to come back.
Yeah. Well, here's what's so interesting. Reading an article on The Real Deal, which really was referencing a Wall Street Journal article. So take that as you will. The question they were asking is who's buying, because so here's the interesting thing. When we talk about the prices in New York dropping, it sounds like, wow, what a no-brainer for somebody to buy. And the problem is the rental prices are dropping too. So if you're buying because you're an investor, then you need to have enough capital that you can hold on and make up the difference for getting a significantly lower, as in 20% lower than usual rent that on your property. If you even fill the rent, because
if you're buying it as an investment,
that's what I'm talking about.
Yeah,
because when you say that prices are dropping, then you think, okay, investors must want to buy. And the reason that they aren't is because they need to make a certain amount back every month to pay for their expenses. And the rentals have dropped so much that it doesn't cover expenses. So it makes it, in the short term, riskier to buy, even though in the long term, almost every investor is confident they'll make back in capital appreciation and the value of the property itself will increase. Getting it rented is just too hard. So that's why it's such a buyer's market, because you have to be willing to live there or not need to have a renter in the property.
I see what you mean. Yeah. It's, I just realized what I did wrong, so you couldn't see that absorption rate.
Oh, sure. There's also much of the city's excess inventory is high-priced new development condos that were actually sitting unsold way before the pandemic. So it was kind of a perfect storm of a lot of things happening at the same time.
Right, but it's hurting everything. It's if you don't mind me plugging my 200 Hicks Street.
Yes, go ahead.
It's a really rough numbers, so nobody out there quote me on this exactly, because I don't want to bore you with super specifics. But basically, a 1,300 square foot co-op penthouse in a cute, incredibly cute building. I think it might be Brooklyn's oldest co-op. Period.
Surrounded by, when there are a ton of celebrities living within a block of the place, it's a really good sign.
The penthouse, if I comp it out as if it needs a renovation, no question, complete renovation. But when I comp it out to the unit across the hall, there are only 2 penthouses in this building. And when I comp it out to that one, it should price at about $2.5 million. We have it listed at $179, and you can figure the difference there. That's a $600,000. You tell me you can't get a renovation done for $600,000, 1,300 square feet.
Yeah,
renovated for $600,000. It's a no-brainer. But
it's a no-brainer. It's such a good deal, and
we have a lot of people kind of circling, but
everyone's
we've got a
nervous to
couple
pull triggers
really
right now.
low. Yeah, the only way they'll pull the trigger is with a super low offer.
Yeah.
So it's just crazy right now. But I think that's going to turn. Count
Yeah, there is an interesting. Okay, so do you know what the salt? Let's tell our audience about the salt deduction cap, which is interesting if you are thinking about New York real estate at all, because it's a $10,000 cap on state and local tax deductions, which started in 2018. And it was part of President Donald Trump's Tax Cut and Jobs Act. But it's been a thorn in the side of the industry. So Douglas Elliman
increased taxes for anybody that owns property because they limits their deductibility of their mortgage interest.
Exactly, which we don't love. So the hope is with the Biden administration, the industry will, we're hoping that the cap will be lifted. So
it seems counterintuitive, doesn't it? I mean, you think about it, you wouldn't have thought that President Trump, being from New York and being a real estate investor,
developer in chief,
would have limited that. And then to think that on the other side, you would have assumed that something would have been more the other way, that Biden would have been more likely to do, or a Democratic president would have been more likely to do that than a Republican president. But it sounds like it may be exactly the opposite.
Yeah, the notes, Deloitte prepared a report after the presidential election with notes based on what Biden said. So we'll see. And his position at the time on the deduction cap was said to favor repeal. Still vague, but at least it's a little hope. So we'll see.
New York could use, I know that nobody has any sympathy for New York because prices are so crazy. But if you just within that little island itself, literally, it's killed them. And a lot of the
taxes are,
there's been a lot of taxation, mansion taxes, the fees.
And there are a lot of the luxury market. It's still moving. There are still things happening there.
Just at a lot slower volume, but a lot of those people
slower volume and lower
have relocated. They moved to Florida, moved to Texas, South Dakota. They're anywhere that there's no state income tax.
Yes.
And like, I can keep a second home in New York and call it my second home. I'll live somewhere else.
Yep. And there are people who have, there's a Bloomberg article referencing a bunch of the highest talent and thus the highest earners in these large financial firms who have gotten approval to permanently be residents in other states, especially Florida, just like you were explaining. So on the other side of that, just one more fun market fact is Amazon is going to put $2 billion into affordable housing, not in New York. Because when Amazon planned to build corporate headquarters here in New York City, the opponents claimed that the influx of high-paying jobs would drive up housing prices, which are already too high, just as it had in Seattle, because historically that is what has happened. So that was one of the biggest reasons that the Amazon proposal was defeated. But now, 2 years later, Amazon has pledged to plow more than $2 billion into affordable housing wherever its employment hubs are. So they're doing that in the form of investments and donations over the next 5 years in Seattle, Nashville, and Arlington. So interesting.
But not New York.
But not New York because we don't have Amazon here. So
I thought Amazon, Google, and Facebook were all buying a lot in Manhattan.
Well, they're not. So they were going to build a new headquarters, like
a headquarters. Okay, so it's basically headquarters. I get you.
When they were having all of these cities bid and fight to have them, and then they decided on Long Island City, and then that changed. Which, fun fact, the fact that Amazon left and did not end up being in Long Island City, which at the time was ballooning prices there. Investors wanted to buy there as it would the prices were going to increase when Amazon came in. The prices have not decreased that much As a matter of fact, the demand has stayed strong. And
the COVID and the fact that Long Island City's less dense.
Yes, and there's a developer who's selling. I think the developer's called East West, and they're selling this almost completed or like midway completed development project for $64 million.
Oh, wow.
So, which is higher than one would expect in a down market. So it's for them, not a down market.
Somebody's got to be. I was just reading Jersey Digs yesterday. There's so much more new development planned. Huge amount of new development planned, and more rentals. Which is Krishner's new building in Jersey City.
Oh, yeah.
Not the one that's going up now, but that's a brand new building that they just
doing
approvals on.
One? I didn't know that.
Yeah.
We already have so much.
A few nights ago. Yeah, I read that. And how many hundred rentals? Holy cow! Still.
That's interesting.
And haven't even broken. No groundbreaking. That's just approved. That was the project that got held up because remember Kushner's got in a fight with Jersey City because of some tax abatement stuff, and they thought it was because Jared Kushner. It was retribution. So Kushner they went to court, and then they ended up negotiating something in the middle of where the two were at. But it's that project. So I should know more about it, but
that's more than I knew. That's interesting. I'm going to learn more. I just opened it up on Jersey Digs so I can learn. Well, thank you.
I like Jersey Digs.
I do too. We recommend it for your real estate news, folks, if you're interested in Jersey. Okay, that's all I have.
That's all I have. It's great to see you.
Great to see you.
Nice to talk about the market as always.
Thank you for joining us today, you guys. And have a wonderful whatever day you're watching this.